Deutsche Bank CEO Joseph Ackermann sounded the alarm, warning that market conditions today are reminiscent of the 2008 financial crisis. Here with us this morning is Paul Hickey. He's the co-founder of Bespoke Investment Group. He has some ideas of his own about where you can find opportunities in the market volatility. And also with us, our very own Michael McKee, our economics editor. Mike, Paul, let's start the conversation off with this question of market conditions. We've been talking about it all morning with our guests, Paul. Do you see market conditions today that are reminiscent of the fall of 2008?
I wouldn't say it's an exact replay of 2008. I mean, in Europe, things are worse certainly than they are here. And we essentially had a stock market crash in October for all intents and purposes. And when you look back historically, those types of declines over such a period of time, the market just doesn't come right back. In every single period where there are about 8 other periods historically where that's occurred, and in every other period, the market went on to make a lower low at some point in the ensuing months. So it takes time for the market to actually get on its footing and find a bottom and rebound.
Are we on our way to a lower low?
I mean, the futures are pointing that direction today, but I mean, who knows what is essentially going to happen right now? But we could, I mean, when looking at the historical perspective, and we have a crisis of confidence on the part of investors and businesses and, pretty much the entire investment community, it just sets the stage where until we get a catalyst that things can, that gets the markets going, it's hard for us to get going.
Some people are worried not just about stock markets, though. They're looking behind the scenes at some of the indicators. Corporate bond spreads are widening. Euro basis swaps, the cost of basically funding yourself in dollars, starting to go much lower. At this point, do you see some of the fear building up in the markets that led us to problems in 2008? You could say that, but you could also argue that last summer we had a similar spike in spreads, and and last summer we had similar fears that things were going to go to hell in a handbasket, and they didn't. Some would argue that the Fed helped pave the way for that. I don't think the Fed has any really means to get that going. The market will see right through it. All QE2 did was debase the dollar and boost gold. But we need some more business accommodative policies out of Washington. What saves us this time?
Well, it's just, this administration, rightly or wrongly, you can argue on either side of the coin, it has a reputation for being very anti-business. And you have a situation where the administration can come out and put some pro-growth, business-friendly policies and mention it, or not just castigate businesses in rhetoric, but this T-Mobile merger last week is just one example. You have a situation where even the Democratic base of unions was pro this merger, and it was blocked. And it's just one symbol, again, of businesses looking and seeing that Washington is not on our side and is against us.
Paul, I know you're saying it's symbolic, but all the same, the Justice Department going out and suing to block the merger on the basis of consumer interests can't be blamed for the stock market not heading higher.
I'm not saying it is, but it's just when you have an administration in power where they have a reputation for being anti-business, and then you have the DOJ come and block a merger, which the unions are pro, the businesses are pro. It's just hard it's hard not to look at that as a symbol.
Well, if there's one thing that Obama could say on Thursday that would maybe affect the markets and affect business confidence, what would it be?
What we have here is what we see in this administration so many times is that they build up things. This is a speech on Thursday that was first announced 2 weeks ago, and most of the details of it apparently have been leaked, the infrastructure. Why not, have a speech where we just say the things out instead of building it up for 2 weeks and having investors, it's hard to live up to those expectations when the entire business community or the entire investment community has been looking up to this speech on Thursday. It's called the speech.
That seems, though, to be more a case of the president, if you're right, getting bad advice on how to communicate things and less a matter of bad policy.
Right. Yeah. I'm saying, as I said before, this administration has a reputation. I'm not saying that it's deserved. A lot of nice people have bad reputations, and so it's a matter of it's a matter of the communications, as you said. The failure to communicate in an effective way is hurting things.
Well, I'll call you a nice guy with a good reputation.
Thanks.
All right, Paul Hickey, the co-founder of Bespoke Investment Group, here to talk with us about what it's going to take to turn sentiment around in the financial market.